Okie dokie, folks. This is Coach Mike. Going to start going over our focus group video and correlating it into the focus group spreadsheet that you should have already received, but is also part of the newsletter announcement. Um, Last week, I'd put on an Apple weekly trade, and I said I wanted to wait a little bit. And then as I watched it transpire throughout the week, I wanted to wait for the weekly close, being obviously willing to still maybe purchase something for a higher price or even a different strike. Now, we're going to start out here with the very first trade I have listed under Apple. It's not a 50-50 trade. It'd be a directional trade. You see I have that Fibonacci target point 118.48. I don't know that it'd get all the way down to that, but I still think it could produce a good trade. Obviously, here on our weekly chart, we're seeing what's called an evening star pattern. And, even though Mondays I don't look to do a lot of early trading, if we get any continuation below last week's close, I think I'm probably going to take a look at those April 17th 120 puts. Unlike last week when I said a specific price, we might be able to get them at 190. I think what I'd be looking at is just, hopefully we could get them by 126. That entry target's just the number that I use to factor in what we'd have to pay. In that case, we'd probably pay about 220. The estimated risk is based on a break back above this resistance point, which would be a weekly close above 129.50. Uh, and obviously that's just if it closed 1 penny above that I think we'd lose 94. But I'd still have to wait for a weekly close. So you'd have to understand that, at least for how I might trade it, if I do it, the risk might be a little greater. Now, the one thing that kind of makes me wishy-washy about this is there was the announcement Friday that Apple's going to join the Dow, which could give it a little bit of a pop. So I think that if we use Friday's close, and if it continues downwards from it, that it would continue downwards. The big thing I want to look at with it, though, is the understanding of, regardless of it joining the Dow and the fact that other stocks during different market conditions have made nice runs just off an announcement like that. Um, One thing I've always said is no stock is stronger than the markets, and our markets do seem to be pulling back a little bit. The only difference, though, is basically if you watch the market overview video, which you should not be watching this video if you haven't yet watched the market overview video. The market overview video is more important than any video I'll ever put out that includes individual trade details, because if you don't understand the markets, you don't understand trading. Um, that big difference would really be that I still don't necessarily think we can have a longer term approach on our short trades. There's a few levels that could be hit fairly quickly and bounce from, in which case we might not see a bunch of downturn on Apple. The difference, though, again, is how we trade the focus group. We don't just look for one trade, hold that forever, and hope it works out. If we took the short trade on this, that does not exclude us from being able to take long trades. We could take long trades to leverage it out and assist us in that way based off of our other charts. So I am going to be looking for, I'd say, a very high potential of buying the April 17th 120 puts for Apple. Um, and that would take us right into before the next earnings, which if it does what it's done for other earnings, it made a big run last earnings, made a pullback, had a little pop, but still pulled back right before the last earnings, which would take us right into that expiration week. And I don't really want to take it into expiration week. I'd probably try to catch it on the shorter term pop over the next couple weeks to get out of those. Going to move now to the daily chart to discuss our next potential trade. This would be a 50-50 trade on the April 17th 115 puts. And quite literally, we had the 50-50 trade that cashed out nicely from last week where we had the lower close right here, and then Monday it popped up, and all week long people were sending me emails crying and complaining that why'd we enter that trade? Well, then Thursday we hit our limit sell for the 50% gain, and then it popped around and hit my trailing stop for greater than a 50% gain. So I was pretty happy that I made that trade. Now we'd be looking at if it failed Thursday's close of 126.41, but we would have to look for a daily close. So hopefully it'd give us a daily close just a little bit below that, so that we wouldn't have to be chasing something that was way down. If it does, for some reason, Monday fall a lot, then I will just exclude that trade and not necessarily be looking for it. The third trade I have on there would basically be if we break this first green line on a daily close, 140 calls. If it's going to continue up and if it does make a higher high, I know a couple people that I was talking to, they also had some channels up there, and I don't trade Apple off channels, but 140 seemed to be a point that I saw channels on, fibs on. I think it's a long shot to hit that, but if it came to just having to leverage other trades, that's what I would do, and that's what I'd be looking at. Now we're going to move over to our 60-minute chart for Apple, and guess what? It's not a candle chart. Why? We had this discussion in the chat room. We replaced our swing point candle charts with these line charts, kind of to help us understand some other moves. Ironically, Apple shot up pretty big Friday. And then you had this W really on your 60-minute, and it failed the W retest at the end of the day. If it would have held that, we could have been talking about a calls trade right off the bat based on the W and a positive move off of what would have been a swing high point. We don't have that right now. But we do have 126.39 as a low 60-minute close area here, but then very close to that 125.90. What I want to wait for is to see if it closes a 60-minute under 125.90. I don't want to get trapped in maybe a little 50-50 trade here that hits this and skyrockets up, and man, that's going to hurt. But those next two trades I have for the March 20th 121 puts or the March 20th 133 calls are based on a 60-minute close above this green line, which was Friday's high, or below this 125.90 for an associated 50-50 trade for the March 20th expiration. Now we're going to go over to our weekly chart on Goldman Sachs. Now, ironically, if you look at what time of year this is, second week of March here, you look right over here, they had an earnings that didn't go super hot, but it wasn't that bad, and then they skyrocketed up to make a lower high, and hey, that's the second week of March last year. And then they went down to make a lower low. Now you see these Fibonacci points marking this high, this low, this high. How we got a little bit below it, but you know what? That was a good target to trade for, because had we sold it right at the target, it didn't go down much from there, and it quickly made a little W and took off again. Well, here we are, fast forward exactly 1 year after that time. We've got a lower high. We've started to pull back on an evening star pattern. We had earnings that weren't awful, but they still did miss the Wall Street estimates. It makes me think that we could replicate what we did last year. And if we did, we'd probably see about 168.58, which is what we've been talking about for a couple weeks. And we finally saw, after it being a pain in the butt for a couple weeks, on Friday a move that finally indicated to us. Remember last week we talked about a daily close below 189, how important that was. We finally got it Friday. Looks like we could get downturned, but you got to understand that doesn't mean it can't ever make a green candle. A down move is just saying that we now expect that any up move it makes will give a lower high, but it could still make an up move. That's what people have to understand. If you cannot expand your focus past what's happening right this second, then chances are you're never going to excel as a trader. We have reason to believe that we could replicate these patterns. And that's where that trade for the 417-170 puts now comes from. If we continue downwards, that's a trade that I think we could make a whole lot of money on. Matter of fact, more than, well, actually just about double our money on. But that's even using the current delta and gamma and theta, which will change as we get closer in the money. In all reality, depending on how fast it were to fall, if it fell like it did over these few week period back here, we could actually see that go for as much as $4 or $5 if it made the move quick before theta started really eating away at any premium that was still there. So those 417, 170 puts, those look appealing to me now, because if we continue down, I could probably get 2 of those with my focus group position size, and I'd be pretty happy about that. For the next trade, we're going to look over at our daily chart. Next trade, you're going to see, man, this guy's got a potential calls play. Well, you know what? We had a hard fall. Now, look at your daily chart. You had this up move, higher high than this little W breakout, obviously. You pulled back, you made a higher high here, but now you've made a lower low. And we got below that 189 level that we bounced off of Wednesday and Thursday that we had talked about as being a critical area. We got below that. But that doesn't mean it can't make a green candle. And even up to this would still be a lower high than the high that it made. So if we started to make a positive move, the first action might actually need to be to take a short-term calls play. And I would look at the March 20th 192.50 calls. And the reason is because I could get 2 of them and probably still be under $200, which is still under a full position, because I don't know so well that that would do well, but it could serve as leverage for us. But you may have already got those last week when I alerted them, and I'm still holding them, which means I wouldn't necessarily take them. But if you see that move, you might want to grab that at a better price than I got them at as a leverage just in case. But I'll also say that now if we fail this 186.58, our 100% line, that projection level, would change and probably change it to less than 192.50, and therefore the 192.50 calls would not be a suitable calls trade for an up move. So if we fail this 186.58, we might need to stop out of those. And even if it were to just drop down a little bit and start moving up again, I'm sure that it would then have a target level under 192.50, which would mean we would have to be in like a 190 strike, and that would be the better trade for us to make rather than just hoping calls that we might have after, if it fails here, come back. So that's what we would look to do as far as those calls do. Again, positive move from here. If you're not already in those March 20th 192.50 calls, you might want to buy. I'm already in them, so I won't be alerting a buy. If we fail the 186.58, we might want to sell those because, quite frankly, 192.50 would probably not be an option for our 100% line. Therefore, we would only want something that had a chance to go in the money at our target area. Now, let's talk about the next play on there, the 320 185 puts. That would be to this Fibonacci target of 182.56. I want you to understand that I've got the support level from listed as this W, 182.04. But I'm telling you that I would sell it if it hit 182.56 just because I don't want it to drop another 50 cents and springboard off of that W, making the bid just completely evaporate and us not be able to get out for a good price, which means really that if we're going to trade this one, we could get out at a better price selling at the 182.56 as opposed to the 182.04 or waiting for that to bounce. Now, this is a position I'm already in. If you're not in it and we continue below this 186.58, you might want to get in it. But I'm already in it, so I won't be alerting to get in that, but I would be alerting to exit it if we hit 182.56. So then you're probably thinking, well, what trades might you be looking to get in this week? And that's the fourth trade. Well, the first trade was one, but the fourth trade's another. For the 417 175 puts. Why those? Well, if I come back and use, that 168.58 was based on high to low to high over all of the moves on the weekly chart. This 174.23, well, you see I had like a double bottom here close to, and then a lower high. Well, I used this lower high to our overall low and up to this high to project 174.23. Now you could see that the high we just made was actually higher than this one, which projects a target higher than this low. The 175 puts I think would be okay just because there's not a 177.50, and the 180s are a little bit expensive for us if we continue down. So I would look at that one for this 174.23 target if we continue downwards below this 186.58, the low from Friday. Now, let me work this all through and explain to you basically what I'm looking to do with my current positions. If we fail 186.58, I'm looking to stop out of my March 20th 192.50 calls. It'll be a loss, but it'll free up some money for a new position. That new position would probably quickly go into the 417 175 puts. And if we continue downwards, I've already got 417 180 puts with that 168.58 target. But if we were to hit this 182.56, I would sell my March 20th 185 puts at that target point. That is the target for it. You could say, well, what if it goes down? Well, what if Aunt Sally had in her pants what I have in mine? She'd be my uncle. We don't trade on what ifs. If it keeps going down, I have other puts for it to go down. And those other puts would then make me some money. But I don't want to get trapped in something that expires a couple weeks from now. Should it hit here and bounce, and now my bid's evaporated and I can't get out. So then comes to the next sequence of the trade. If we get down here and make a positive move, I'm not going to sell my other puts. I would look for a Fibonacci extension point to maybe buy some calls. And on that bounce, take the calls trade up to offset a little bit of the down move that my puts would suffer. And when I get to the target for those, I would sell those calls and look to buy the 417 set 170 puts for that overall move down to 168.58. But I would sell my 175 puts if it hit this 174.23. So I'm not looking to just randomly buy these all at once. A couple of them are positions I'm in that I'm telling you if you're not in, you might want to get in based on certain circumstances. I'm not using any conditional orders this week for these. I'm going to watch these two stocks, Apple and GS, fairly closely Monday because I don't do a lot of heavy trading with my primary accounts on Mondays anyway, because I like to watch the markets first and then take action later. But I'm going to be watching Apple. I'm going to be watching GS. And I might have to stop out of a calls play. I might have to buy a puts play. If it got really, really good, I might get a sell a puts play if it comes all the way down here. But this walkthrough should explain to you exactly what I plan to do. So if you come in to the chat room tomorrow and we're below 186.58, and you're going to say, Coach Mike, are we buying puts? And I'm going to say, well, I either just haven't alerted yet, or I'm already in the puts I wanted, or I made one alert because that's the only one I bought. I might even say, well, I sold my calls. Then you might say, well, it only dropped $1. Now it's going up. Well, then I'm going to tell you to watch this video so that you can understand why I might be buying another calls play if it started bouncing up after failing this and stopping me out of a calls play. And then if you say this is falling, why aren't we buying more puts? I'm going to tell you to watch this video, which will tell you why I don't buy all the puts listed in this spreadsheet and what I'll be watching to potentially buy those puts at a later time. The important thing is watch the video, write out your trade plan, have it on your desk in front of you, understand what the plan is and how we'll do it, and then simply wait for the opportunities and execute. I look forward to trading with you guys in the chat room this week, and I will see you in there tomorrow.